rather buy a company that's a good company, that's out of favor, that's on its way up.
So one of your old holdings, that was one of your biggest holdings, was Sprouts Farmers Market, up to like 200% year to date. It's trading near an all-time high. You said bye-bye?
Yes, so that in this most recent rebalance, it then moved way above our price to sales of 1.5 times. Only about a third of companies out there that are publicly traded trade below 1.5 times, so it's a pretty restrictive number. And that went way above it. It performed very well for us, but now it's gone.
Okay, let's talk about some of the names that you're adding.
Yeah.
One name that I think a lot of people would be surprised to hear would be Peloton.
Yes.
This is a company that has faced incredible pressure since the pandemic.
Yeah.
Why are you optimistic? Why are you bullish?
It comes down to the formula first and foremost. It fits. It trades at 0.7 times price to sales. We bought it around, we were buying it around the $5 to $6 mark. It's now approaching $8. So it has had a bounce back. You know, they're starting to improve on their cost side. A new CEO is always an important and potentially beneficial. It's certainly challenging, but we've seen that type of turnaround before. Believe it or not, Crocs. We owned Crocs when nobody wanted Crocs, and now all my children wear them. You know, we owned Restoration Hardware when people were not going. Nobody's going to go to a store anymore.
Yeah, that's what you have.
And then
like
they became, it was an incredible turnaround story. So there's a lot of. It may not come down to this particular name working the best, but it's just a representative holding of what we'll own. And the idea is you'll get something that's completely out of favor, that's beat down, that maybe has a second life.
Tell us about Herc.
So Herc Holdings is, when we did the rebalance this year, we did find that there was a whole lot of consumer discretionary and a whole lot of industrials. And Herc is an equipment rental company, essentially. Okay. So
ticker is HRI, and it's up about 45% this year?
Mm-hmm.
Cool.
So that, this is typically what we do. We catch something as it's already gone up. We don't want to try to buy it on its way down.
Yeah.
And with the idea
You're okay that you've lost some of the momentum.
We're okay. We'd rather not try to time the bottom, but participate once it turns.
Are you using AI at all now in your analysis?
No AI. This is...
Wait, you're not?
I have to say this is so simple that it's almost too so, And I come from an analyst background where I had to know.
You know, for the last year and a half, that's all we talk about is AI. But go ahead.
I came from a background where I covered banks. I didn't know how old the CEO was, where he went to, where they went to play golf. All these kind of intricate pieces of data. But this is really, it's fundamental quant is what it's called. And the idea is you really just want to boil it down to very simple metrics and just stay with it year in and year out. And it's worked.
Tim, if you don't know, loves to eat a lot. He just finished a sandwich.
It's still got some left if you want.
It'll come up. Brinker International is another name that you like. EAT is the ticker. Love that. It's up 183%, but you've got it in the portfolio for the coming year. So there's more momentum to the upside. Got about 30 seconds.
Yeah, so EAT, Chili's is the name brand. Also, Cheesecake Factory. Both of those are two restaurants that are now in the portfolio. Again, it's the same sort of situation we've looked for all these companies.
Cake is up 33% this year.
And, you look at these names that we add in, and an example that worked really well is Super Microcomputers we owned, and we owned it as it went completely up until it didn't. And we actually got rid of it because it was too expensive. So
who needs AI? We just need Ryan Kelly. Ryan, good to see you with you. Have a great holiday season. He is the Chief Investment Officer at Hennessy Funds. Coming up next, we're talking a big name, though, Walmart.
listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right,
It is
everybody.
Bloomberg Business Week.
Oh, sorry.
I'm going to do the survey.
Oh, yeah, okay. We do want to know what you want to know from us.
This is why I have to do the survey. Okay.
Survey away, Tim.
What would you like to know about on Bloomberg Radio? What would you like to hear about? Help make shows like ours even better by taking our Bloomberg audience survey. To do that, just visit youtube.com/Bloomberg Podcast. Click the link in our profile or community section to take the survey. It's hosted by our partners over at Material. You can fill it out now at youtube.com/Bloomberg Podcast or scan the QR code that you see right now at the bottom of the screen.
All right, so Walmart, top of mind for us. It's certainly one of my gainers that I've been watching today. It's up about 3.7% as we speak. It's up 66% year to date. The company boosting its outlook for the year on a solid start to the holiday season and also strong demand from U.S. consumers who are, Tim, searching for some value.
Stronger than expected sales. That's pretty good.
Yeah.
Okay.
Always good.
A holiday outlook that looks pretty good. Shares are up 65% year to date, far outpacing the S&P 500. We got the details on the report and the outlook from Emily Cohn. She's here in the studio. She's Bloomberg News consumer team leader. It's sort of, you said earnings are always ongoing for these retailers, but we like to look at a company like Walmart to get of which American consumer is spending, and I think we got a really good picture of that today. What's the highlight from there?
That's exactly right, Tim. So yeah, Walmart is a great bellwether of how the American consumer is feeling, what they're spending, what they're taking their wallet out for, what they're not. What was really interesting today is, and we've sort of seen this narrative with Walmart so far this year, is the growth that's coming is mostly from higher income shoppers. So there may be not people who always went to Walmart.
Yeah.
Maybe they went to a Target or a Whole Foods, but are looking for a deal and are coming to Walmart more. That's where 75% of their growth is coming from. Higher income households that are earning more than $100,000 a year. So not your typical value-seeking customer. These are wealthier people who are looking for deals. And that says a lot about the American economy and the American consumer. And that's what's interesting.
Can we assume a wealthier customer goes in and they spend a heck of a lot more money? Their basket of goods that they purchase is a lot more too?
That's exactly right. So what we saw today was that transaction growth
Yeah.
slowed versus where it was last year at this time. So the growth of transactions was slower, but people are putting more in their baskets. They're spending more at each checkout. So where does that come from? A lot of the growth at Walmart right now is in groceries. That's about 60% of their business now. So you got to think about the higher end consumer who's maybe coming in and filling up their basket with organic goods, gluten-free stuff that they've added a lot of at Walmart over the years to attract these higher end clients, and that's paying off. Also, e-commerce for them is a huge growth area. They talked about it a lot on the call. There's just a ton of room for growth there for them, and they're adding a lot of inventory.
How much of their business is e-commerce right now? Do you have
That's
any
a good
idea?
question. It's growing quarter over quarter. It's in double-digit growth. This quarter, I think it was up 22%. And what they're doing is, like, you can buy stuff at Walmart now that you would have never thought you could buy at Walmart. Pre-owned watches, collectible sneakers, not things that you would find in the store.
Well, so that's what I wanted to ask about, Emily. Is it that wealthier consumers, wealthier households are going to Walmart because they're looking for a deal? Or is it that Walmart, over the last few years, has added products and services that these consumers actually want? Or is it both?
I think it's a little of both. I think also if you look at what's happening at the lower end of the spectrum, what's happening to dollar stores, like dollar stores are really suffering. Why? Because they don't offer that variety that Walmart has. Like Walmart now, you can get everything. And you can place the order online and you can go pick it up at the store, and it's just very convenient.
Is e-commerce finally working for them? I mean, they've struggled for years. They bought Jet.com for billions of dollars. Mark Lowry left a few years ago. They shut down the Jet business. They still have the technology. Is it working?
It's working, not yet profitable. That's
Okay.
their long-term target. Not there yet. The CEO said on the call this morning they're not rushing there, but that is the focus, is growing that business, and there's a long runway there and making it profitable.
Their comp sales, man, 5.3% for the quarter through October 25th, higher than the 3.73% that analysts were expecting. I mean, that is a massive beat.
Yeah, huge.
What did they say about pricing? I'm just thinking we're coming off the election. Inflation was a big topic. What's going on with pricing?
So really interesting. There was not a single mention of tariffs on the earnings call. No one asked about
is
it.
interesting.
No one mentioned it. Possibly.
Not like they get goods from overseas or anything.
Exactly. So that I think that's just because it's a little bit too soon to say. The CEO did go on CNBC later in the day and said there probably will be cases where prices are going to have to go up if these tariffs that Trump's talking about do go into effect.
So a bellwether, certainly for the higher end of the consumer, but are there any warning signs that we're seeing with the way lower end consumers
Struggling or anything.
yeah, are spending?
Yeah, I mean, we'll have to see about the holidays. I think like the holidays are off to a strong start. They're seeing momentum there, but it's still early. A tricky thing about the holiday season this year is that it's actually shorter. Thanksgiving falls later in the calendar year than it usually does. So we saw Walmart, Amazon, all the big retailers kick off their sales in October.
It was sick. We went from buying pumpkins to like Santa.
Yeah. Soon we're going to be doing our holiday shopping in
Or
July.
those big skeletons, right?
Yes,
To buying
skelly.
Santa and reindeer.
Just put a hat on the skeleton.
That's
then
what
you're
people.
good.
Your HOAs
Yeah.
don't like it, but they're doing it. Emily
yeah.
Cohn, thank you so much, consumer team leader at Bloomberg
Thank
News.
you so much for having me.
All right, for those watching on TV, the close is coming your way. Tim and I, though, continuing on Business Week.
This is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. New York prosecutors say they would object to his hush money trial being dismissed, but they are open to Donald Trump's sentencing being delayed until 2029. Legal analyst Jessica Levinson says if that seems unusual, it is.
We have never had a former president who's a convicted felon, who's reelected, who's awaiting sentencing. Judge Merchan is in the unenviable position of being the first judge in the country to confront these questions.
Trump plans to nominate billionaire Howard Lutnick as Commerce Secretary. Business analyst Jill Schlesinger.
The job of Commerce Secretary is to support U.S. businesses, and essentially Commerce can act as an intermediary in between the U.S. and other countries, but also between the government and specific industries.
Lutnick served as co-chair of Trump's transition. He was also a major donor. Other Trump choices like Matt Gaetz for Attorney General are running into opposition. Caitlin Huey-Burns reports from West Palm Beach. Trump is standing firm.
The Republican senators have been kind of bombarded with all of these cabinet positions and these picks, and they will have to obviously go through the entire confirmation process, which won't start until next year. But the lobbying has already begun. And really, you've seen members of the president-elect's team really try to put the pressure on these senators.
Ukraine used American-made long-range missiles inside Russia for the first time today. It's also the day Russia's war entered day 1,000. Here's correspondent Holly Williams.
We were here when the invasion began back in 2022, and we've witnessed the resilience and ingenuity of the Ukrainian people in the face of that invasion. Many Ukrainians are proud of how their country has stood up to that assault by Vladimir Putin. Undoubtedly, many Ukrainians are feeling monumental grief.
More wildfires in the Northeast and wildfire smoke. In the West, an atmospheric river will create all kinds of weather hazards. Meteorologist Grant Gilmore.
You've got an incredibly powerful bomb cyclone, which is essentially a strengthening low pressure system that's going to feed in one of the strongest atmospheric rivers of the season so far.
The head of FEMA went before Congress today and answered questions about allegations that hurricane assistance was denied to some Trump supporters.
This type of behavior and action will not be tolerated at FEMA, and we will hold people accountable if they violate our standards of conduct.
On Wall Street, the Dow Jones Industrials are down 165 points. This is CBS News.
TaxRelief.com.
It was a film that generated publicity for all the wrong reasons, but Stacey Lynn reports it's about to be more widely viewed.
It's been 3 years since cinematographer Helena Hutchins was shot on the set of the movie Rust.
Were you in the room when the lady when someone was shot? Holding the gun, yeah. Okay.
Now the film will make its world premiere at a film festival in Poland. While the decision to screen the movie caused some backlash, the demand for tickets was so big, the event's website crashed this morning when they were first released. Alec Baldwin, who handled the prop gun that killed Hutchins, was charged with involuntary manslaughter, but the case was dismissed.
Are you doing okay? No, I'm not, actually.
Organizers told The Hollywood Reporter he was deliberately not invited to the screening because it would be a distraction. Stacey Lynn, CBS News.
The National Transportation Safety Board says the U.S. must address the growing public health crisis over high traffic deaths. They remain well above the pandemic levels. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, Bloomberg Business Week continuing on radio, on YouTube, on Bloomberg Originals. Yes, it is Tuesday, November 19th. We are just about 55 minutes away from the closing bell on Wall Street, and we are up near our highs of the session. I'm Carol Massar along with Tim Stenivek, and we got a lot going on.
Yeah, what's happening in geopolitics certainly front and center. The latest on Russia's war against Ukraine was somebody who understands intelligence of the region and really gets Putin.
Yep, totally does. A big study, deep study into Vladimir Putin. Also, Kraft, mac and cheese, and Band-Aids, they're getting out-premiumed. What is going on?
It's today's big take. We'll explain exactly what that means. Also, 9 steps for making progress in your career. A professor from Harvard Business School joining us a little later.
You're just fine. You don't need to follow these steps. I'm just going to tell you.
Thank you.
You're doing just
Thank
fine.
you, Carol.
You're very welcome. Also doing fine is Charlie Pell. Let's get an update on the trade. Hey, Charlie.
Oh, hello there. 14 steps higher right now for the S&P, up 14. A gain there of 0.2%. 59.08 where we stand on that index. We've got the Dow lower by 168, down 0.4%. Nasdaq up 155. That is a gain right now of just about 0.8%. 10-year 4.37% with a 2-year 4.26%. Gold up $19 the ounce, $26.30. That's a gain of 0.7%. West Texas Intermediate crude up 0.6%, $69.60 for a barrel of WTI. Bitcoin trading at a record 93,378 right now on Bitcoin, up by 2.2%. As for the investment backdrop, Emily Rowland is co-chief investment strategist at JH Investments. She has got this advice for investors.
I think one of the things that we need to think about here is the consensus around the U.S. is so overwhelmingly positive right now. And when the consensus moves to one side of the boat, sometimes it can flip. So we want to think about, potentially fading some of the move that we've seen into more speculative assets and redeploying assets into higher quality, more defensive options here, given the massive run that we've seen in more speculative assets.
Intuit and HR Block shares lower after the Washington Post reported that the leaders of President-elect Donald Trump's Department of Government Efficiency discussed creating a new way for Americans to file their taxes. Intuit down 5.5%, H&R Block down by 8.2%. Briefly, New York Jets have fired General Manager Joe Douglas. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Well, Ukrainian forces carried out their first strike on a border region in Russia using Western-supplied missiles. As President Vladimir Putin approved an updated nuclear doctrine expanding the conditions for using atomic weapons, it was the first known attack following the decision by Joe Biden's administration to approve Kyiv's limited use of the weapons to hit targets inside Russia, and it was 2 months before Donald Trump takes over promising to quickly end the war.
Yeah. We talked about this a little bit earlier. I got to say, for the past week or so, we've been dying to talk with her, and she always finds time for us. She's a go-to for all things Russia, Ukraine, and Vladimir Putin. Back with us is Dr. Angela Stent, senior fellow at the Brookings Institution, a member of the Council on Foreign Relations, former National Intelligence Officer for Russia and Eurasia at the National Intelligence Council. And I got to say, she's also done policy planning at the U.S. Department of State, so much more. She is also the author of Putin's World, Russia Against the West, and with the rest, I'm still waiting for her next book. She joins us from Washington, D.C. D.C. Angela, good to check in with you once again. Why is all of this happening right now? Feels kind of urgent. Read the tea leaves between the nuclear doctrines and what we're hearing and what is going on. Help us out here.
Well, things are not going that well for the Ukrainians on the battlefield. And Zelensky has been pleading with the U.S. to allow Ukraine to use these long-range Atacama missiles to strike inside Russia. The Russians now have 10,000 North Korean troops fighting in the Kursk region in Russia, part of which Ukraine occupies, but now they're saying they could have as many as 100,000 there. So Ukraine wants to survive. It understands that when President-elect Trump comes into office, he is going to push Ukraine to negotiate with Vladimir Putin, with Russia, and that Ukraine wants to be really in the strongest position that it can be if it's going to have to make concessions to Russia. And Russia, on the other hand, Putin feels that he's in the driver's seat. They're doing well on the battlefield. He knows that President-elect Trump wants to make a deal, and he wants to make a deal more than Putin does, because that's what he promised his supporters, the people who voted for him, to end the war. So we're now, we have 2 months more of the Biden administration. And so from the Ukrainian point of view, they would like the Biden administration to do as much as it can to help them be in the strongest position they can be in if they're forced to negotiate.
Is that how you explain the U.S. missiles that were used recently?
I do. Yeah, I do. And I think it's, again, this has been on the table for a long time. The Ukrainians have been asking for this. And now that the U.S. has given them permission to use these missiles, the French and the British have also been supplying Ukraine now with some longer-range missiles. So that explains the timing of it. I think a number of us believe it would have been better if they would have had permission to do this earlier.
Why didn't we do it earlier?
Because the Biden administration has always been very concerned about escalation. I mean, you saw with Putin's new nuclear doctrine, this is intent to intimidate, to threaten us. You see some Trump supporters tweeting that we now risk World War III because the Biden administration has allowed the Ukrainians to do this. So Putin revises a nuclear doctrine, says, I'm lowering the threshold for using these weapons. He's trying to stop the U.S. and its allies from helping Ukraine.
Intimidation or the first step to a possible reality? I'm trying to understand. I hear nuclear doctrine or changes or lowering a threshold, and yeah, my spidey sense goes up. So I'm just trying to understand what it really means.
So he would like us to believe that this is a real threat, and that if these weapons keep coming, he might actually either detonate a tactical nuclear weapon, or the Russians have been undertaking a lot of acts of sabotage, particularly in Europe, against industrial installations. They tried to assassinate the head of one of the main factories that's supplying Ukraine, cyber intrusions. So it's all of that. Does he really mean it? Of course, we don't know the 100% answer to that. But I think that what the Biden administration has finally concluded is, if you're too worried about escalation, but then Russia keeps escalating anyway, why not let the Ukrainians do this?
Hey, Angela, what's a win for Vladimir Putin? Does it have to mean that they get access to territory that they want?
So the minimum from their point of view is to get the Ukrainians to recognize the annexation of these 4 territories that Russia claims to have annexed, but it doesn't fully control. And they want Ukraine to promise that it will never seek to join NATO. And they're calling for the demilitarization of Ukraine, because Ukraine now has a very strong military. That's what the Russians want. And if you look at the plan that, Vice President-elect J.D. Vance put out, it's rather similar to that.
So let's talk a little bit about where this goes and how it ends, because it has been 1,000 days. And every time we get a chance to speak to you, I ask you the question, how does it end? But a lot has changed since last time I asked you that question, including President-elect Donald Trump, along with J.D. Vance, the promises that they made on the campaign trail, and also what Putin has threatened and what Ukraine has been able to do. So now, given all that, how does it end?
So it probably does end with negotiations. I mean, the Russians may be willing to sit down and negotiate. That doesn't mean they actually want to conclude negotiations, because they want to keep hoping. They keep hoping that Ukraine will become weaker. And of course, if the Trump administration stops supporting Ukraine, either financially or also with weapons, then the Russians could get their wish fulfilled. So I think it ends probably with a negotiation and with Ukraine having to make some territorial concessions. But the question is, what will the Ukrainians get in return for that? And they really need to have very robust security guarantees that they will be able to withstand and deter another Russian attack on them, which will certainly come if they don't have these security guarantees. And this is where it becomes very complicated, because the only security guarantee that for them to ensure that Russia can't invade again would be NATO membership. But clearly this is not something they're going to get with the incoming Trump administration.
I mean, all of Europe has got to be watching, all of the world has to be watching in terms of what Vladimir Putin's intentions are. And that is kind of, putting back together what the Soviet Union used to be. So having said that, is there any real guarantee, can you trust the word of Vladimir Putin, that if he says, I'm done, but he really is probably not in terms of future invasions?
Right, when you can't, because you know that his goal still remains to change the government in Ukraine, to have a pro-Russian government, and not to occupy Ukraine, but to really subdue Ukraine. That's been his goal since February 24th, 2022. And as long as he's in power, or someone like him is in power, Russia probably won't stop unless it's properly deterred. And that's the real challenge.
How do you think about, a Donald Trump in the White House potentially having to still deal with this situation? I mean, are you assuming that he's going to have to figure this out? It's not going to end before he gets to the White House? And if so, how do you kind of game out what seems to be a like relationship between Donald Trump and Vladimir Putin? I'm not quite sure how much is what we see or what we hear versus what the reality is, but how are you kind of gaming that aspect out?
Well, we know that the war isn't going to end before he gets into office. And I'm watching Putin very closely, because on the one hand, he congratulated Trump a few days after his election. He said he was brave to the way that he survived and dealt with his assassination attempt. On the other hand, if the Trump people said that there was a phone call between Trump and Putin, the Kremlin denies it. The Trump people say that Trump asked him not to escalate. Well, he's escalated. And the very week that they had, that he congratulated Trump, one of his favorite TV propagandists, a woman, on her nightly talk show, they had a very derogatory and salacious report about Melania Trump. So how do you figure that? That's almost trolling him before he comes into office. So I'm watching for these signals and seeing how the Russians play this out.
We only have about a minute left, Dr. Stent, but I'm wondering what all of this means for Eastern Europe and for the continent in general.
Well, I think that the Eastern Europeans realize that they may be on their own. They may face, if Russia thinks that it's winning, they can face more threats from Russia. I think Europe as a whole understands that it's going to have to do more for its own defense. But the problem is they're not completely united on all of this. For instance, the Germans won't supply the Ukrainians with the long-range weapons. And of course, the German government's collapsed, and we don't know what the next German government will do. So it would be better if there were European unity, but certainly those countries, Poland, the Baltic states, the Brits as well, but those countries on the front line are really gearing up to do as much as they can to prevent Russia from moving further west.
Angela, 10 seconds. This war, does it end next year?
I don't know, but it's probable that it will end next year.
All right. Thank you, as always. We know you're busy, but you always find time for us. If we don't talk to you before the end of the year, have a good holiday season. Dr. Angela Stent, Senior Fellow at Brookings, member of the Council on Foreign Relations, perfect person to talk to about this.
Coming up next, it's Bloomberg Plugged In, the latest on EVs. We're going to be joined by Garrett Nelson, Senior Equity Analyst over at CFRA.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. We've got stocks rising. It is a volatile session, though, marked by geopolitical headlines. NVIDIA higher ahead of its results tomorrow. And Bitcoin, by the way, hitting a record digital asset trading above 93,000. So here's where we stand right now. The S&P up 17, 59.11, up 0.3%. Dow Industrials down 136. That is a decline of just about 0.3%. NASDAQ up 168, a gain there of 0.9%. Your 10-year 4.38%, with the 2-year 4.27%. Gold up $20 the ounce, up 0.8%, 26.32 on the precious metal. West Texas Intermediate crude up 0.7%, 69.65 per barrel of WTI. I mentioned that record for Bitcoin right now at 93,388. Bitcoin up by just about 0.2%. Blackstone has agreed to buy a majority stake in the sandwich chain Jersey Mike's as the alternative asset manager looks to further its investments into food services chains. Today, Blackstone is up 1.2%. Jersey Mike's closely held. And Delta will begin serving Shake Shack burgers on flights out of Boston beginning December 1st. It does plan to expand service to other U.S. markets with Shake Shack burgers throughout next year. Again, recapping, U.S. equities are trading higher. S&P up 17, up 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. If you never want to miss a Bloomberg Business Week story, become a subscriber today. You'll unlock deep reporting and analysis from reporters around the world, including unlimited access to Business Week. You can check out our offers right now at Bloomberg.com/subscribe now.
All right, everybody, time for another edition of Bloomberg Plugged In, your weekly look at EVs. President-elect Donald Trump's incoming administration looking to slash fuel efficiency requirements for new cars and light trucks, all as part of plans to unwiden President Biden's policies that he has blasted as an EV mandate. This is according to people familiar with the matter.
Okay, so the policies don't explicitly order EVs. Critics argue the rules are so strict, though, that they act as this de facto requirement to sell EVs in large numbers, especially for later years. So lots of stuff to talk about with Garrett Nelson, Vice President and Senior Equity Analyst at CFRA Research. He joins us from Richmond, Virginia. Garrett, we're going to get to some of your picks in just a minute, or your views, I should say, on these stocks. But big picture, we haven't had a chance to check in with you since the election. Big picture, how does a Trump administration change your view of EVs?
Well, one thing we think that's changed is that we can say with almost complete certainty that the federal EV tax credit will be going away when new tax legislation is passed, likely next year. You know, all you have to do is look at the 20 agenda items listed in the 2024 GOP platform, and one of them was canceling the EV mandate and cutting costly and burdensome regulations. And we think, you know, given the Republican election sweep, we think that means an elimination of the federal EV tax credit program. And to the surprise of some, Tesla, of course, the largest EV manufacturer and seller by far, has actually been advocating for the elimination of the EV tax credit. And we think it's because they think it will hurt the EV sales of their competitors more than it will hurt their own sales. And so it will widen their competitive advantage over other automakers.
Huh, okay. So not that big of a deal for Tesla, but a bigger deal for other companies.
That's right. And, you know, we agree with that. We think, you know, consumers really factor the EV tax credit into their buying decision more for other EV models than for Teslas. The Tesla just has a, you know, more established brand, and customers that really aren't as, because they generally sell luxury EV models, we don't think buyers are really dependent on that EV tax credit to make their purchase.
Interesting. I mean, take a step back. You know, we know that the EV story, people are still buying EVs, but they're also now buying hybrids in a big way. And so, you know, the market hasn't disappeared, but the growth numbers have certainly pulled back. So when you look at the transition to EVs still going to happen? I mean, how do you see it kind of bigger picture here? I mean, China is all in, and they're producing some really less expensive models, which I think it's safe to say there are a lot of Americans would like to have a lot more choices that are less expensive.
Yeah, we think it might be a surprise to a lot of your listeners to know that the hybrid market is both larger and growing faster than the pure battery EV market in the United States. And so we think what's going to happen is that traditional automakers are going to invest more in hybrid development than EVs and really pull back on their EV growth plans. So, but it really varies by automaker. You look back 3 or 4 years, and each automaker really took a different strategy. A lot of the Japanese automakers, such as Toyota and Honda, were never big believers in electric vehicles, and so they invested a lot more in developing hybrid models. And we think they're going to really reap the benefit over the next few years in terms of market share gains compared to companies such as General Motors, who really made an all-in bet on EVs as the future of the U.S. auto market.
Okay, speaking of folks who are going to be beneficiaries here, let's talk about Tesla. Because you guys recently raised your opinion on shares of Tesla to buy from hold.
Is this a Trump trade?
That's what I'm wondering.
It is. So much of Tesla's future depends on getting approval for autonomous driving. And when it became clear the election result, and given how much Elon Musk had invested in, not only President Trump but other candidates, he really has. Major influence on the regulatory framework for autonomous driving going forward. Of course, they had the robo-taxi day last month. They said all their future vehicles will neither have steering wheels nor pedals. And instead of a very lengthy state-by-state process in terms of getting approval for autonomous driving, you're looking at a single framework run by the Department of Transportation, which could supersede that. So it really, we think, moved the time frame up by perhaps a matter of years. Just the fact that of what happened with the election.
Are there other numbers? I mean, you've got to sell on Rivian, so going in the other direction. Tell us about that one. You've got a 12-month price target of $5 a share. Let me just pull it up on the Bloomberg. We've talked about it a lot here. It's down about 56% year to date, trading right now at 10 and change. So you're talking about, a 50% haircut here. What's the future of Rivian in your view? It doesn't sound pretty bright. Doesn't sound.
No, Rivian is one of a handful of smaller EV manufacturers that just doesn't have the size or scale to compete longer term. You look, the company will probably produce and sell less than 50,000 vehicles this year. You compare that to a company like GM or Ford or Tesla, all of whose sales will likely exceed 1.8 million units this year. So they're just a fraction of the size in a very competitive global industry. And the auto industry historically has had a very high failure rate because capital costs are extremely high, it's difficult to achieve scale, and it's very competitive. And already we've seen a number of bankruptcies recently in the EV space, looking at Lordstown, more recently Fisker, and Rivian's burning cash at a rate of about $1 billion a quarter. So you look, this company still had a little more cash than debt on the balance sheet, but given that cash burn rate and really what they have to do to achieve scale is build a new factory. They want to do that in Georgia. The cost of that new factory is going to be about $5 billion. So they're in a very tough position.
Is this a company that is at risk of the worst?
Are you going to say the B word?
Yeah. I mean, Elon Musk talked about this for years, Garrett. He's talked about how difficult it is to create a car company in America, how very few car companies in the last 50 years in the U.S. have actually succeeded. I think the number is only Tesla at this point, he says. I mean, you have Rivian out now, too, and a few other. But it's a really tough market.
Yeah, in fact, Tesla is the last company since Chrysler, and that was back in 1925.
That's the stat. Thank you.
Yeah, so that shows how difficult it is to survive in this industry. And so we've seen a number of bankruptcies. I mentioned the 2 companies. I think you're going to see more, over the next couple of years. So, they're in a very difficult spot. They did reach an agreement, a JV agreement with Volkswagen that gave them a nice lifeline, $5.8 billion cash infusion. The stock had a little bit of a rally on that, but fundamentally, we don't think it changes a whole lot.
Where do you think the EV space is in? I'm not quite sure even what the smart time frame is to be thinking about. Is it 3 years? Is it 5 years? When is there another kind of significant narrative around EVs in your view?
We think it's when EVs really come down and they're closer to price parity with internal combustion engine vehicles. As it stands today, last month, the average EV was 17% more expensive than the average of all vehicles in the United States.
Yeah.
And so you look a year ago, that premium was only about 8%. So that gap is widening. It's not going to help with the EV tax credit going away. And also, oil prices expected to fall. You look at the EIA forecast where they expect oil prices to go. EVs really benefit from when oil prices are higher. So there's a lot of headwinds facing EVs, as well as increasing competition. Traditional automakers are still planning on bringing a lot of EV models to market.
Hey, Garrett, before we let you go, we got a couple minutes left. The president-elect, Donald Trump, is actually headed to Brownsville, Texas to go to SpaceX's Starship 6th test launch. We're going to bring you that live when that happens. But it shows the close relationship that Elon Musk and the president-elect have. And I'm wondering how your view on Tesla would change if that relationship in some way became fractured.
Good question.
Yeah, that's a good question. There's all kinds of questions regarding potential conflicts of interest. Elon Musk's new role as an advisor at the Department of Government Efficiency. Obviously, SpaceX has NASA significant NASA contracts. We really think of it, more as a Tesla angle. From a Tesla angle, what does it mean for Tesla? And we think, really anything that threatens his future at the company is of concern to us, because the stock trades at a massive premium to the industry. And we think a lot of it is just because of Elon's presence at the company and a belief that he will continue to create value for shareholders over the long term. So when things happen that threaten or question, his position at Tesla as CEO of the company, that's what really concerns us. So, that's really what we look for.
All right, we're going to leave it on that note. Garrett, great to catch up with you. Covered a lot of ground. Garrett Nelson, Vice President and Senior Equity Analyst over at CFRA Research, joining us there from Richmond, Virginia. All right, folks, just about 26 minutes to go until we wrap up the trade on this Tuesday afternoon, and we're hovering just off our best levels of the session. So what does it mean? You've got the S&P up about 1/3%, up 17 points. NASDAQ 100, a gain of 120 points, so that's good for a gain of about 0.6%. Some earnings after the close. We're going to break them down a little bit later on, but watching the market, see how it ends. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got the Dow lower, the S&P, NASDAQ. They are both advancing, but let's head over to the first word breaking news desk for today's afternoon call, and here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading mixed right now, but well off the Ukraine worries opening lows. Dow's currently down 153 points. S&Ps are higher by 15, and NASDAQ gains 122. The U.S. 10-year yield at 4.39%. Gold is higher by 20. Oil is in the green. And Bitcoin, that's higher by 2%. Among the main 11 S&P sectors, leaders were tech and telecom. Energy was under pressure. And leaders to the upside in the Dow, NVIDIA and Walmart. UNH and Disney led to the downside. After earnings, Walmart did rise 3.8% to an all-time high after raising its outlook, while Lowe's fell 4%. In the tech space, Supermicro soared 31% on new auditor and compliance filings. And in deal news, Blackstone agreed to acquire Jersey Mike's. Wrapping things up, Lazy Boy reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. One sports note, the Jets have fired general manager Joe Douglas. And to hear live breaking news over your Bloomberg, type squawk SQUA on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we are just 18 minutes away from the closing bell on this Tuesday. And as Charlie just mentioned, we're pretty much hovering, at least on the S&P and the NASDAQ, near our highs of the session. But we are still seeing a little bit of a loss on the Dow Jones Industrial Average. So let's get to it, our drive to the close. Andrew Cry, he is Co-Chief Investment Officer of Crescent Grove Advisors. He joins us here in our Bloomberg Interactive Broker Studio. Welcome. How are you?
I'm doing well. Great to see you both.
Tell us about Crescent Grove, who you guys are managing money for, how much you've got under management, and what's top of mind for your investors right now.
Sure. About a $5 billion RIA, mostly focused on private wealth, ultra high net worth.
Everybody's focused on private wealth.
It's a place to be.
There's a lot of money there, I guess.
There's plenty of money to be managed.
Ultra high net worth, so give us the typical portfolio size.
Yeah, so our sweet spot's going to be, call it 20 to 100 million. And it's going to be sort of endowment-like in the way that we invest. So diversified across asset classes, a healthy slug of illiquid asset classes, private markets, but built sort of from a generational wealth perspective, right? These are long-term portfolios, kind of long-term in orientation, diversified, and top of mind, the election, right? I mean,
all right, so what change?
How could it be anything else?
What changes for your investors? Like, do you make moves coming off of the election outcome, or just too soon?
No, I mean, long-term in focus, right, is the emphasis in terms of how we're thinking about these multi-generational.
I mean, if you're investing in private credit, you ain't getting out now.
Well, that's the other thing too, right? Yeah, you make these illiquid bets, and you're counting on these managers to try to navigate as best they can. But in some cases, the money's in the ground. You know, you're in private real estate, you're in private equity, those sorts of things. There's not a whole lot you can do beyond just trusting these managers to work with their portfolio companies to navigate the conditions as best they can. So, absolutely, you're not tweaking those allocations, but everything else, you know, the questions come up. Well, what do we do? You know, do we need to make meaningful changes right now as things are unfolding? And for
anybody want to move to cash? Cash-like?
Yeah, we've had some folks, you know, express concerns about the near-term potential for volatility over the next several years. And, you know, in some cases you say, all right, let's take some chips off the table. We've got a great run, mega cap tech. You know, let's use that as a funding mechanism to put together kind of a liquidity reserve. And if that makes you feel a little bit better and sleep at night, and we can set aside a few percent of the portfolio, so we've got the next 12, 24 months of expenses covered, and then we can let the rest of the portfolio do its job and think in that sort of long-term fashion, then sure, that's a compromise we're willing to make for those types of clients.
So you're from Tennessee, but you ended up at the University of California, Los Angeles?
I did, yeah.
Were you in California then, or did you go from Tennessee to UCLA?
I went Tennessee, LA, New York, Chicago, Grand Rapids, and then UCLA.
Okay. But were you in state at UCLA, or were you out of state?
No, out of state.
So there's...
Is there a method to your madness?
That's pretty rare.
Okay.
Especially these days.
What? Yeah. Wait, going in and out?
I mean, yeah, well... The UCs are like full of Californians and international students.
Oh, okay.
But these are like these are schools that like are a ton of Californians go there.
They need somebody else to subsidize the California in-state tuition, so they
That's
let in
you.
people like me from West Michigan. I'm convinced that I was like one of 2 applicants, and it just happened to be barely better than the other.
And now you're in Milwaukee.
Yeah, exactly.
And you're here in the Bloomberg
They're like
Interactive
this
Brokers
Andrew
Studio.
Cry guy.
We love
he's
it.
From,
See?
he's from Tennessee. Let's throw the dice and try this
Yeah,
out.
exactly, right.
I love it. You know, you got to understand the person's full story. Carol.
No, I totally agree, and I always love that you go there. Having said that, I feel like when it comes to
Let's ask some real questions now.
No. But like diversity anywhere is usually a good thing. Diversity of thought in the investment universe. We're at a moment in time, right, Tim, where it feels like everybody's coming on and saying, buy small caps. I'm just curious, what's your thinking about the diversity of thought, being smart, looking for the alpha, like how you go there?
Sure. So a lot of the alpha for us is in private markets. I would say, that's an area where we've
Thanks
spent...
for all of us peons.
Right, yeah. So that's where we spent a ton of time over the last number of years.
Speak for me, not for you.
Hey.
Really looking to find structural inefficiencies that can be exploited on a repeatable basis by managers that tend to be, from our perspective, a little bit smaller fund sizes, more niche in their orientation.
Are they still attractive? There's no nervousness about exits and kind of what happens here? And
well, there's kind of the denominator effect, so to speak, and you've had this issue where these private allocations have kind of grown as a percentage of the portfolio. Certainly, you go back to 2022. Yeah, I mean, the valuation piece, that's become a little bit of a concern in some areas of private markets, but one area we might point to would be real estate, where they're actually, I think the converse might be true. There are people that have kind of run away or taking a step back and saying, we're not going to put new money to work right now. So for us, that's an opportunity to lean in, look at some specialty segments of real estate potentially.
So what happens?
Is it the Bank of America Tower or Brookfield?
Yeah, that's in LA.
A couple of properties that are on sale right now.
Case in point, there you go. The opportunities
We talked about
for
that
the
one
right people.
yesterday.
What are the opportunities in real estate, though, that you guys are going after for your investors?
Sure. So what I would say the big thing for us on the horizon is a big maturity wall. So think about all these developers that were either developing or buying properties, value add type investors in 2020, 2021 at very low rates. They've got loans coming due, and they've kind of been sitting and knitting and waiting and saying, well, we're going to see a normalization of interest rates. We're going to see valuations come back to where they were, and so we're not going to do anything. We're not going to hit the bid at this point in terms of transacting, but now they're going to be forced to, because they're going to have to reckon with a bank that's coming to them and saying, either you need to re-equitize this property, you need to come in and bring some preferred equity in behind where you sit from an equity perspective, or you're going to have to transact at a level you don't like, but that creates a ton of opportunity for buyers.
On the public equity side right now, when you're building that portfolio, let's say new money comes in, where are you putting in terms of equities?
Yeah, I think today, sitting here, a new dollar going to work, the fear is that the unknown, the ambiguity around what trade and tariff policy is going to look like. So I think for us, kind of the key narrative underpinning markets right now is one that's more focused on U.S. assets and sort of a home country bias for now. So
at least at the large cap side, things are very expensive.
Without a doubt.
Yeah.
Right. So we would say mega cap tech versus everything else is kind of the high level taxonomy, right? We like the everything else bucket at this point. We'll see what NVIDIA reports tomorrow in terms of their earnings, and that being sort of a lens into
Do your investors want to be in NVIDIA?
Well, they like the idea of participating.
They wanted to be in there 2 years ago or 10 years ago.
But
Didn't we all?
Yeah.
The AI theme, I think, continues to be a popular one, but at what price? What valuation are you willing to pay for that?
Yeah.
So for us, I think it's just more of a relative value blocking and tackling portfolio management exercise, right? Where we take some chips off the table and look at some things that are less demanding from a valuation perspective.
Got to ask you before you leave, 30, 40 seconds here, the fixed income play here. I think we're all trying to figure out, there's concerns about spending, what this means in terms of inflation, what it means for the Treasury trade. What's the fixed income play right here?
I think it's more likely than not upside bias to yields at this point, although we are at a more balanced level for sure.
Above 5% on the 10-year easily?
I think we could touch 5 again, go back to kind of where we were at the end of last year for a period of time where we touched it and bounced back, but it feels like kind of 4 to 5% is going to be our range on the 10-year at this point. If we do see meaningful surprise from a growth perspective, if that ticks up, if we see inflation actually tick back up and inflect higher, then I think you start talking about 5 plus.
Where do you want to be on the curve?
Yeah, so
or fixed income?
Yeah, I would say for us right now, it's a little bit more of a focus on credit. So IG, high yield credit, which really is a function of the pro-growth environment, the strong corporate balance sheets and corporate health going forward. Why not capture that incremental spread, take advantage of that if we don't think defaults are really a meaningful risk?
As long as things stay good, right? The economy, you got to make sure things are going good.
That's right. That's right.
Mega defaults. Fun. You kept up with us.
Try to.
I didn't.
It was a little bit of a
I just
volley.
was hanging out.
I know you were. No, you were. You kept up. Andrew Cry, Co-Chief Investment Officer, Crescent Growth Advisors. Thank you.
Great to be here.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
Ready?
I'm ready.
All right.
Are you ready?
Can we talk Jersey Mike's?
In a second. First, I want to do a survey.
Okay. Oh, survey.
Yeah.
Survey.
What would you like to hear about?
Do you eat at Jersey Mike's? Let us know.
What would you like to hear about on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg audience survey. Visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey. It's hosted by our partners over at Material. You can fill it out now at youtube.com/Bloomberg Podcast or just scan that QR code that you see at the bottom of the screen.
Folks, we are living in a QR code world, so just jump right in and be a part of it. But let us know what you want to know. Tim and I love when Bloomberg folks, Bloomberg terminal users actually reach and they message us directly about.
Sometimes I get some rude comments, which is fine, okay?
We're strong. We can take it. We've got a spine.
It's all good.
We love hearing from you. So please, send us information. Send us your thoughts. Send us what you like. Send us what you don't like.
Okay, I got some breaking news.
What do you got?
This is not. You got to check your email. We got some breaking news from the president-elect Donald Trump. He has nominated Dr. Mehmet Oz to serve as the Centers for Medicare and Medicaid Services Administrator. That's the CMS administrator. The president-elect goes on to say that America is facing a healthcare crisis, and there may be no physician more qualified and capable than Dr. Oz to make America healthy again.
I would put that in, and if you've been watching on YouTube and on Bloomberg Originals, I think I was a little surprised. But I think there is two camps in terms of some of the nominees. Some that are much more like your usual suspects or folks who've been in politics or in their related fields and maybe make sense in terms of some of these nominations. Not just my opinion, it's just kind of what people have been saying. And then there are those that feel like are kind of outliers and a little unusual. And it'll be interesting to see as we go through the process. There's been a lot of writing and speculation about whether this is a strategy on the part of the president-elect, but kind of interesting.
Yeah, remember just 2 years ago, Dr. Oz ran against John Fetterman in Pennsylvania. Fetterman ended up winning that Senate race. Dr. Oz got a lot of criticism for whether or not he actually lived in the state of Pennsylvania or how much time he spent in the state of Pennsylvania. The president-elect goes on to say that Dr. Oz will work closely with Robert F. Kennedy Jr. to take on the illness industrial complex and all the horrible chronic diseases left in its wake.
I think it's safe to say, I feel like we've been talking about one of my first missions 20, 25, 30 years ago was when the Clintons were trying to fix healthcare. It's been a nut to crack. I think folks would say that Obamacare was certainly a great first step. And in most major, federal programs, whether you go through the different assistance programs that are out there, Medicare, Medicaid, what have you, is that it's a first step and that things get tinkered with. And healthcare is expensive. It's a big cost to society. And there are a lot of people who don't have healthcare. So putting some minds and interest and attention to it is probably a good thing.
And on the healthy food front, let's not forget that it was Michelle Obama during the Obama administration, the first Obama administration, that really tried to change what was in school lunches. She planted that White House kitchen garden, which I believe still continues to this day. So,
are you sure?
Yeah, I think so.
Oh, okay.
I'll check in the National Park Service.
All I will say is you and I spend so much time talking about food, how it's grown, what's in it, how we've been changing diets around it. So I think this is certainly relevant. Is it still
the
there?
National Park Service says that the First Lady Jill Biden added a floral cutting garden to the north end of the current garden in 2021 to continue her tradition of bringing fresh cut flowers.
All right.
But maybe they moved it. I don't know.
All right. So we don't have time, but we just do want to mention, I know our TV colleagues are going to dig into this a little bit later on television, but Blackstone agreeing to buy a majority stake in Jersey Mike's as the alt-asset manager looks to further its investments into food services chains. We just want to put that out. The move follows last year's agreement by private equity firm Rourke Capital Group to buy Subway, the larger rival of Jersey Mike's, for more than $9 billion. I guess the deal from Blackstone could value Jersey Mike's at about $8 billion, including debt. This is what we have reported here at Bloomberg News. So we promised we would do that story, so we put it out there.
Okay, there you go.
Are you hungry?
I'm hungry.
Always hungry. I'm hungry for the close. We're just a few minutes away. We're going to head over to our TV colleagues, folks. We are seeing equities kind of hold near their best levels of the session, slightly higher on the S&P, NASDAQ 100 up about 0.7%. We've got some earnings coming your way as well, including Lazy Boy and Keysight Technologies. Closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
We're about 2 minutes away from the end of the trading day. Alex Steele alongside Matt Miller here to help you take you through the closing bell in a global simulcast. We're joined now by Bonnie Quinn, Carol Masser, and Tim Stanovic, bringing together our Bloomberg TV, radio, and YouTube audiences worldwide.
Who let Matt in? Shouldn't he be home sleeping? I don't know.
Nah,
Just
he's
saying.
so excited.
Okay.
I like to fill in. I'm filling in for you on Friday, Carol.
know you
I'm giving
are.
you a long weekend.
Also, be careful because he tries to steal guests and he also plugs his own show.
He does
I'm
that
just
all
putting
the
it out
time.
there.
He listens in and he's like, who's that guest? It's like, oh, man. All right, what do you got?
I'm looking at a market here around the highs of the session. You got volume a little bit light here, but the NASDAQ is up by a full 1 percentage point, really playing that NVIDIA into earnings tomorrow.
It's a good thing there's nothing going on geopolitically. I'm just going to put that out there. It's amazing markets are even up a little bit.
You know, you guys are looking at the equity market. I'm looking at crypto. Bitcoin, another new all-time high today. Right now, it's higher by another $1,100, 92,400 for Bitcoin. Matt, did you ever find all that Bitcoin you lost?
It was, fortunately for me, it was a small amount, but I did never find
Wait, you lost it?
the private key. I lost a small amount of Bitcoin.
How much is a small amount?
It would be maybe a 9/11 at this point.
I am so convinced he's got it and he just won't tell us.
Used to be a small amount. Now it's like, that sounds like almost that's more than a full Bitcoin,
I
right?
want to know if he lost it or if it was requisitioned and if we're going to get it sold at
It's
some
been
point. when all of it's
confiscated?
Like, yes.
Who bought it? Did Bloomberg buy it?
I bought it myself. I will say, I bought it myself. At the time, I paid $600 for each Bitcoin that I used. I lived on Bitcoin for 2 weeks. I didn't use the U.S. dollar.
This is a long time ago. It's like 10 years ago.
Yeah, it was a long time ago. And I'm trying not to think about it, but every time Bitcoin hits a new high, everyone reminds me that I lost the private key. The closing bell is what you are hearing right now, and we're finishing up on the day on the S&P 500 by 0.4%, 5,916 on the S&P. I like that because 916 is my favorite Ducati. The NASDAQ up more than 1%. Alex has pointed out that tech really driving this rally, and that is definitely true. 18,987, the level there. The Dow Jones Industrial Average. Who looks at that anymore?
I do sometimes.
The kids always make fun of me when I bring it up.
I know.
43,268, 269. The Dow actually down a little bit on the day. The Russell did quite well. I would put the Russell here if I were you.
Hey, don't hate on the Dow.
The Russell's right there. The Russell's right there. There's a chart with a line that look at the Russell.
Ah, I see. That's in the big screen.
Well done, well done.
Up 0.8%, 2,324.25 on the Russell. So it's really an amazing turnaround. When I kicked off my show, Bloomberg Open Interest from 9 a.m. to 11 a.m. every weekday. This morning, futures were down more than 1%. And I had an argument with Katie Greifeld. She said, we should lead on Walmart. We're a single stock story show. And I said, no, we have to lead on the broader market. It's down on Ukraine-Russia jitters.
Matt, it's your world and we're just living in it.
It's true. It's true. But here on this show, I was like, Carol, we're going to lead with tech.
I know.
You're the boss.
Exactly. All right. S&P 500, guys, let's look at kind of more of a downward tone, if you will. 191 names actually gaining ground on this Tuesday, 312 to the downside. Vonnie.
Yeah, exactly. And pertaining to Matt's point, one of the only sectors that was actually lower today, if you go into the map, the IMAP function on your Bloomberg, was energy. And that was possibly because there was a little bit of a back and forth between whether we were having geopolitical tensions escalate or whether there's just too many barrels of oil out there for the demand that's necessary. Right now, we're below $70 a barrel.
All right, everybody. We want to take you to a live shot. We are seeing Donald Trump there with Elon Musk. They are getting ready for another launch. And so we've been monitoring what is going on. But the two of them, something I feel like kind of joined at the hip, the two of them.
It's the Starship Flight 6. They're targeting a 5 p.m. Eastern Time launch.
Musk is right there with him. That's great.
There you go.
Yeah,
he is.
Doesn't matter if they're flying, to New York City to go to UFC or chilling on the plane eating McDonald's. These two have been side by side pretty much nonstop. We are expected to see that launch happen in the next hour or so. Brownsville, Texas is where that's going to happen.
Yeah, kind of interesting, though, to see that Trump has traveled there to be there at that site. So we will definitely follow that and the launch. But these two individuals, as we said, we know that Elon Musk has certainly been involved on calls with leaders, involved with the transition team, and just talking to the president-elect about policy. But we'll continue to monitor that and wait for that launch coming our way at 5 p.m. Wall Street time. In the meantime, time. Let's get to some of the individual gainers, if I may. We are seeing super microcomputer. I know.
Okay, Carol.
Don't look at the red.
Okay.
Look away.
Don't you do gainers?
Shush.
Hey, where's your Bitcoin key?
All right. Oh my God. I am so glad you're back, Alex Steele. Super microcomputer, guys, up 31% in today's session. Top in the NASDAQ 100, top in the S&P 500. Company hired a new auditor. Always a good thing. Followed the plan to come into compliance with NASDAQ listing requirements. I mean, they're seeing this as a big step of kind of getting their house back in order, but we'll continue to follow it. Investors certainly big on this one. Walmart up 3% off its highs. Again, another top gainer in the S&P and NASDAQ. They boosted their outlook for the year on strong demand from U.S. consumers searching for value. High-end consumers, they are seeing more and more of those at Walmart. We talked to our own analysts. And Pact Holdings, please don't judge me. It was up 25% today, and I thought I was in like Flynn, but apparently not. Finishing the day with a decline of about 0.7%. We know we did it yesterday before the close. Trump's Media and Technology is in talks to buy Pact Holdings, according to those familiar. FT first reported it, but we've done our own reporting.
Sounds like not. Sounds like those talks are off.
I'm ignoring you for now. Let's go to Tim.
All right. Let's talk about some of the decliners. Did you guys see shares of Intuit and H&R Block? They both fell today. This after the Washington Post reported that leaders of President-elect Donald Trump's Department of Government Efficiency, we just saw one of them right there, Elon Musk, discussing creating a new way for Americans to file their taxes. We saw shares of Intuit fall today by more than 5%. Intuit, of course, makes TurboTax. Along with H&R Block, the two just dominate the U.S. tax prep industry. They earn billions of dollars a year providing digital and in-person services. So if there were an easy and free way to do this that more Americans would use, then that foreseeably could hurt their business. We should note that the IRS has rolled out a pilot program for taxpayers to file their returns for free online. It's part of the Biden administration's Inflation Reduction Act. Also, Insight Corporation shares fell today. At least at one point today, they were down the most since April of 2018. Shares falling by about 8.3%. The company said it's pausing enrollment in a mid-stage study of a treatment for chronic spontaneous urticaria, which is a skin condition. Analysts are disappointed with the pause and note that the management appears uncertain about next steps due to pending review by the FDA. I know we got some breaking earnings coming.
Yeah, you know what? Let me jump on those for you. Keysight Technologies right now out with adjusted EPS at $1.65. We were looking for $1.57, so that's a beat. Revenue was $1.29 billion. We were looking for $1.26 billion, so that's a beat as well. And Keysight says first quarter adjusted EPS will be 165 to 171. So that whole range is above the 157 that the street had estimated. Keysight offers electronic measurement services using wireless modular and software solutions. It is a $26.5 billion company that you probably have never heard of.
I definitely have not heard of it.
No,
Just
but it's
everyone.
huge.
Yeah.
But I wish I owned it yesterday.
Yeah. All right, let's get to the bond market here, guys, because I think it's interesting where we ended up. If you take a look at the 2 and the 5 and the 10 and the 30, you saw a little bit of a bit in the back end, but barely nothing from what we saw before we opened for the equity market and the cash market. You had 10-year yield at one point down by about 9 basis points and a real safe haven bid.
9 basis points.
Yeah. And then now we're down by 2.
I don't remember the 10-year yield being down 9 basis points.
I am looking at the intraday JIP.
I'm quoting Ferris Bueller's Day Off.
Oh, they talk about basis points in Ferris Bueller's Day Off?
Ferris is like 9 times.
They definitely do not.
Oh my God, that was digging deep. Anywho, my point is that we definitely saw a reversal a little bit in that safe haven bid, despite the fact that you still saw a touch of buying in the long end.
All right, guys, I want to talk about what's going on in airports. We both have 2 good stories. Caviar cart, lemon zest, mocktails, Spanish wine.
Nice.
It's all happening courtesy of Capital One Financial.
Yeah, the lounge wars, they're on. So it's MX versus the Chase Sapphire Lounge at some airports now. And then at DC,
you need a reservation.
At DC, they have the Capital One Lounge.
And maybe even have to pay to get in.
Jose Andres is the chef there, or it's the partnership. He's part of it. It's more like a private high-end restaurant. Food you'd rave about outside an airport. More than that, it's less like a traditional sort of rest and recharge place. Look at the pictures of this thing.
It's not like the financials French fries we grab on the fly when we.
Speaking of French
I
fries,
get secret gourmet food.
it's not quite Jose Andres, but it is Danny Meyer and Delta. If you buy first class now, you can actually get yourself a Shake Shack burger. I think this is supposed to be a quote-unquote perk. It doesn't sound quite like the caviar that you
Are
might
you
get
kidding?
at the
I would
Capital
far,
One.
I would far prefer the Shake
Me
Shack
too.
burger.
Well,
But can you imagine sitting in economy and you just smell the Shake Shack burger like coming to you from first class?
the
Like
idea,
that's
I
gotta
think.
hurt, you know?
It's the Seinfeld skit, right? The hot fudge sundae in first class while...
Doesn't it have to have the fries with it, though? It didn't say anything about the fries. Do the fries come with it?
Fries don't carry well.
I want to know, like, that's a good sort of, I want to know if it tastes the same on the plane as it does in the restaurant.
You should try it.
Yeah, well,
I'll be in the Capital One lounge. I'll just let you know now.
yeah. Exactly.
Right? Don't we have a Capital One cafe just down on the street
Downstairs
level?
in this building.
Yeah.
Yes, we do. It's a fantastic place to hang out, and they have great ATMs.
Yeah, and I bet they know where their crypto keys are or whatever the heck it is that you need.
That hurt. She got it in there.
Too soon, too soon. All right, guys, that's a wrap. We're cross-platform, radio, TV, YouTube, Bloomberg Originals. We do it across the board. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, hello, Goodles.
Hello. Oh, I'm not the Goodall. That's a mac and cheese.
Hello.
Goodalls are mac and cheese. I'm sorry.
Goodbye, Kraft Mac and Cheese.
Welcome to getting out premiumed,
Yeah,
as
I
Carol
know.
Masser writes.
I didn't write it. Not my word. Leslie Patton did it. Customers are increasingly paying up for higher-end items or trading down to cheaper private label store brands.
It's today's Bloomberg Big Take. It's deemed a must-read by our Bloomberg editors. It is among the most read stories, too, on the Bloomberg terminal, and also perfect timing for what we saw out of Walmart a little earlier today. We've got with us a Bloomberg News consumer packaged goods reporter, Leslie Patton. She joins us from Chicago. So something really strange is happening that I didn't know about until I read this story earlier today, Leslie. It's that just like in society, the middle class is kind of disappearing. The middle of the shopping spectrum is kind of disappearing as well. Explain what's going on.
Yeah, that's right. It kind of echoes that trend, like you just said. So people are increasingly choosing to either pay up, so pay a premium, a very high price for something they put a lot of value on, or they're saying, hey, maybe this isn't an important category to me right now. I've seen really high inflation over the past 3 or 4 years, so I'm going to trade down and get something cheap, less expensive, save my money.
All right. So why is this kind of happening in the industry? Is it a case of companies that make all this stuff are seeing demand and just kind of offering up what customers want? Is this about seeking higher margins, certainly when you go to the higher end? What's going on here?
Well, I think from a consumer behavior standpoint, it's really happening because people are being forced to be a little more discerning about their decisions in the grocery store. We've all seen inflation of 30+% in the grocery aisles for the past 3 or 4 years, over the past 3 or 4 years. And that's really driven us to make hard decisions. So low income, middle income shoppers are really choosing to go up market or to go down market. This isn't necessarily happening as much with the higher income people, but this is really happening in a lot of America.
What does it mean for the companies that have made this stuff for years, like Kraft Heinz, for example?
Sure. So for a lot of these companies that make legacy brands, like a Kraft mac and cheese or Procter & Gamble, who makes a lot of the products we know and love, like Dawn dish soap or Love's diapers, they're really being forced to adapt, to really respond, especially, I think, on the premium end, to some of these higher priced, higher end, more benefits that they're advertising to consumers type items. And in some cases, even rejiggering and shuffling their portfolio of brands a little bit. If a brand doesn't make sense anymore, it's not doing well, getting rid of it. Or at the same time, if there's a super premium brand out there, maybe the company would consider buying that brand.
Well, let's talk about some of those brands and how they sort of work together. Because it's my understanding that when it comes to these private labels, these quote-unquote generics, oftentimes they're actually made by the same company that has this sort of name brand premium product. Can you talk a little bit about that?
Yeah, sure. So it's not always the case, especially some of these huge manufacturers like a Procter & Gamble or a Kraft. they really do make their own products, and they've built up that IP, that proprietary data over time. But in a lot of cases, kind of like other midstream brands that aren't as big, that aren't necessarily the category leader, they may be being made by the same as like a private label. And then when you get further down the supply chain, a lot of those suppliers are exactly the same. So the raw materials going into whatever product it is, whether it's, mac and cheese or a diaper, sometimes it's coming from the exact same source.
Well, I'm not going to mention the actual companies because I can't find it, but let's just say there was a recall of a certain product in recent months.
Right.
Of this premium product, but included in the recall was also all these generics as well. And I was thinking to myself, wait a second, does that mean
they're the same?
That this premium product is also making the Whole Foods 365 version, for example?
I think it's so great. It's so funny because, Leslie, we talk about this actually in the makeup room because a lot of the makeup artists have said that a lot of makeup is kind of made from just a few major suppliers.
Oh, interesting.
And so even though you've got different price points and obviously different names and brands, like it's all kind of, a lot of it is coming from the same place. So to Tim's point, I mean, is a lot of like high end coming from the same companies that are making generics for different companies?
Sometimes, not always, but yeah, sometimes for sure it's coming from the same. Now, that doesn't mean always it's necessarily the same exact item, even if it's coming from the same manufacturer. But yeah, a lot of these big manufacturers, a little further down the supply chain do, supply name brands, private labels, super premiums, all of that stuff. They really have kind of like a monopoly on the market in certain cases, I think.
Okay, back to the story. I'm sorry, I got us completely sidetracked. I'm just fresh in my head, Carol, because I threw away a lot of carrots last night. You saw the carrot recall?
Oh, I didn't.
Big carrot recall. Leslie, you saw the carrot recall? Big carrot.
I did, yes.
Okay, good. Big carrot recall. Everybody should check their carrots.
I just ate some carrots.
They're probably fine if they're from recent, but we had to throw away some carrots. Anyway,
Okay,
E.
so where you
coli
wanna go?
concerns. I want to go back to what it means for retailers because, as Leslie knows, we are in smack dab the middle of earnings season. We heard from Walmart today. We got the other companies reporting later this week, TJX and Target as well. What does it mean for the retailers that are actually selling this stuff?
For retailers like a big name like Walmart or Target, they're looking to bring in more of these premium high-end labels because that really brings in the shoppers. It's newness. It's exciting. Target always says they want to surprise and delight the customer. So by having a lot of these new products that are a little, frankly, like flashier on the shelves, they may be more exciting. They offer supposedly more benefits, like in the case of the Good Old's mac and cheese, higher protein, higher fiber. These are on-trend type things. This gives the retailer like a leg up on other retailers. That brings people into your store, and if they're picking up a box of mac and cheese, at Target, you're going to buy something else too.
It's interesting too, and I think about are companies kind of having to rethink about what they're putting out there and maybe go higher end or lower end, just because I feel like there are so many new choices, so many new entries by startups, in kind of very established product areas. And so as a consumer, we have a lot of choices. Just pick your category. I mean, I even think about like buying paper towels or something. Like there's so many different choices. And so I can kind of figure out, so are they just trying to figure out ways to distinguish themselves?
Yeah, I think that's right. They want to distinguish themselves from the other retailer down the street. Obviously there's Target, Walmart, but let's not forget Amazon too, where you can find just about anything. And almost sometimes the choices at Amazon are just overwhelming. So if you don't want to shop online for something, you're going into the store, you want that selection to be a little curated. And that's the job of a Target or Walmart buyer or Costco buyer, for example, or even Aldi. Take that store, for instance. They're largely private label. I think something like, the majority of their products are their own brands, but at the same time, they want to surprise and delight customers too. And that means coming up with these new items that are premium, that are even private label. So that's another side of it too. We have private label gaining traction, becoming more and more popular at retailers.
Interesting. Interesting. Bloomberg Big Take, a Bloomberg exclusive. You can find it on the Bloomberg terminal at Bloomberg.com. Leslie, thanks. Leslie Patton, Bloomberg News consumer packaged goods reporter out there in Chicago.
Hey, just to bring everyone up to speed on that CDC carrot recall a few days ago.
You're freaking me out.
I know. That's why I'm
no
reading
idea.
this to you. November 16th, Grimway Farms recalled multiple sizes and brands of bagged organic baby and whole carrots.
That's exactly. I do the baby
365,
organics.
Bunny Love, Cal Organic, Sprouts, Trader Joe's, Wegmans, Wholesome Pantry. Check out the CDC notice. Make sure you're not affected.
I will. This is Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. President-elect Donald Trump is nominating Mehmet Oz to serve as the administrator for the Centers for Medicare and Medicaid Services. According to a statement from Trump, Dr. Oz, quote, will work closely with Robert F. Kennedy Jr. to take on the illness industrial complex and all the horrible chronic diseases left in its wake. Earlier today, the president-elect announced he's tapping Cantor Fitzgerald CEO Howard Lutnick to lead the Commerce Department. Stocks rebounded in a volatile session marked by geopolitical headlines, Nvidia climbing ahead of its results tomorrow after the bell, and Bitcoin extended its post-election rally. S&P 500 index up 23, a gain today of 0.4%. The Dow was down 120, down 0.3. Nasdaq up 195, up by 1%. 10-year 4.39%, the 2-year 4.27%. Gold up 0.8%, 26 $6.32 the ounce. West Texas Intermediate crude up 0.7%, 69.65 a barrel. And Bitcoin at 92,000 did trade at a record above 93,000 today. Bitcoin right now up by 0.7%. Super microcomputer shares surged today, up 31% after the company hired a new auditor and filed a plan to come into compliance with NASDAQ listing requirements. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really do appreciate it. Well, think about where you are in your career versus where you want to be in your career and the moves required to get there. It's the subject of a brand new book co-written by 3 business school professors, including our next guest, Ethan Bernstein. Ethan Bernstein is professor of business administration at Harvard Business School. He joins us from Boston. The brand new book is Job Moves, 9 Steps for Making Progress in Your Career. Ethan joins us from Boston this afternoon. Ethan, good to have you with us. How are you?
Thank you, Tim. I'm doing great. How are you?
We're doing well, thanks. Excited to talk to you about this because it's actually based on a Harvard Business School course and research that the 3 of you have conducted with over 1,000 professionals. Can you talk a little bit about how you made this book? I almost said how you built this book because it is something that you guys spent years building.
And it is based on new product development. But look, this was the genesis of the book. Let's start with some numbers. Every year, roughly 1 billion people change jobs on average. People do a job move roughly every 4 years these days. And what we know is that hundreds of millions report that they're disappointed with the outcome from their switch. You ask an audience the fastest they've ever gone from taking a new job to realizing it's not right for them, and usually as many as 3/4 say less than a year. Maybe they ended up in a new role they've quit quietly, maybe they started a new job search just months after arriving in a new job. Whatever the case, I personally find that frustrating. People invest a lot in a job move, and so do their families and communities. The ROI should be better. And so in 2009, now 15 years ago, we decided to do some research on job switching to try to make it better. And our research over the past 15 years that's followed and supported over 1,000 job seekers shows that we actually can help. It starts with a simple reframe that we stole from the world of product design and the jobs to be done theory. Just like people hire products or services to make progress in their life, we find that people try to hire their next job as much as their employer hires them to make progress in their career. And that's the premise and the framing behind the book.
Can I just say, wait, I'm not sure if I'm following you, but I've often talked when I talked with younger individuals or folks in my family who are younger, you know, and starting out their job career. And I'm kind of like, you need to interview too for the job that you want, as well as companies interviewing you. This is a process, but there's 2 sides to it, right? Like you really need to kind of figure out where you want to go, what you're looking for, and really kind of know what you might be stepping into. Is that fair?
Absolutely. There's a supply side and a demand side. And that's why we, you know, Bob is a guru, a genius in new product innovation. He's invented more products than any human being I know. And so he brings to the table the work that he did with Clay Christensen, who is well known for his work on innovation around jobs he'd done. This idea that when consumers buy a product, they hire that product for a struggling moment in their lives that the product helps them solve. There's a root cause that leads them to purchase, not just the attributes and features of the product, but how the experience they'll have with it. And we find truly that's how people do and should think about the next step in their career when they make progress through a move. And that progress is defined by a bunch of causes. We call them pushes and pull forces that help them make that progress by hiring that next job, that next organization. Maybe it's even a role within their organization for the job to be done in their career.
Ethan Bernstein, professor of business administration. We're speaking with him right now. He's at Harvard Business School. Professor, you mentioned 2 other names, Michael Horn and Bob Muesta, who are the co-authors of the book. You co-wrote the book with those 2 other individuals. You also just mentioned Clayton Christensen, and I think anyone who's gone to business school certainly understands what a legend he is in the world of business, even of course outside of business school as well. He passed away just about almost 5 years ago at this point. Can you talk a little bit about his influence on the project and this whole idea of disruptive innovation?
So very personally, Clay was my dissertation advisor, or one of them. And he's the person who brought us together. And so in that sense, Clay was instrumental in creating the space for us to create this book. In fact, the reason I met Bob Muesta in 2009 and saw him interview a customer who'd bought a product to understand what the job he'd done that customer had purchased that product to serve was because Clay, let's even say, voluntold me into the session in Aldrich Hall here at the Harvard Business School to see it. And that was the genesis for the idea of framing the book this way and doing the research that we did using those validated protocols that Clay and Bob created, but not on customers buying products, but rather employees choosing jobs. Michael Horn is a class of 2006 from here, an education and upskilling guru who co-authored a book with Clay. He co-authored Disrupting Class and has since authored a number of books on education and upskilling. And so the three of us each bring something different to the table. I'm the HR talent people professor. Michael is the education and upskilling guru, and Bob is the new product development wizard.
Can I ask you something? And I feel like it's just a moment in time right now, and I've been thinking a lot about this. There's been a lot of writing about it, about the diploma divide and how that maybe explains the election outcome. And I kind of feel like it all ties in, because we're going to talk a little bit later, actually after you, about people doing apprenticeships, which is not something that's very popular in the U.S. anymore, but it is overseas. But I do think about education, and I do feel like employers still want, academic pedigree. They look for that. And yet we have a lot of Americans that don't necessarily have college degrees, and maybe that explains to some extent the political outcome that we just got in the U.S. presidential election. I'm just curious if you have any thoughts that kind of tie some of this together.
We're trying to help people match with organizations and with roles. That's what this book is designed to do. And in that sense, both sides, the supply side and the demand side, as we were talking about before, get stuck in this what I will be or what someone has on their resume rather than what someone will do and how suited they are to the experiences. So when most people think about changing jobs, they tend to focus on the features they want, things like better hours, less travel, higher pay, a worthy title,
more balance.
And the employer. They all sound great to me. And the employee is thinking about, okay, so what can I put in my resume to fit all of those, to make all those things level up on the job description that says that they want an entry-level employee with 5 years of work experience. It's all a sales job from person to person, on the basis of the features and the attributes rather than the experiences and what will actually be done. And so part of what we're trying to do is make this a conversation instead about the forces. What are the things that are pushing someone away? We have 14 push forces that we found over these 1,000+ individuals we've interviewed. And what are the pull forces? What are the opportunities they see that pull them towards something? And when those things align, they create enough of a pull and a push aligned to overcome the habit of the present and the anxiety of a new solution to keep people in place. And it's not about all of those attributes. Those are nice things to have, but it's actually about the progress towards those pushes and through those pulls that someone is going to actually make. And so in that sense, it does align with the idea of diplomas and how we think about their role, because some things require it and some things don't, but we're not really talking about that because we're just thinking about the attributes rather than the experiences and the do's.
There's some incredible names that have blurbed the book. Reed Hastings, the co-founder and executive chairman of Netflix, writes that job moves is packed with stuff I wish I'd understood 40 years ago. Follow these 9 steps. Full disclosure, he's also on the board of Bloomberg, I just learned. But it kind of raises a point, like, this is a guy we're talking about who's, co-founded a company that revolutionized media. He's worth $7 billion, according to the Bloomberg Billionaires Index. Yet he says he can learn from this book. Who's it for?
And we've had some very generous early readers, so I'm grateful to read, and many of the others that are blurbed and have mentioned the book. The book is for primarily people who have had at least one job. That doesn't mean you can't benefit from it if you haven't, but if you've had one job, then you have a sense of what is pushing you away from that and what might be pulling you towards something else. In that sense, then, it's also about people who are on some kind of quest, somebody who wants to make progress. So one of the things we did with these 16 pulls and 14 pushes, we then looked for patterns, and we found 4 patterns. So people are typically on one of 4 quests. They might be trying to get out. Those are people who are trying to reset what their job is expecting of them and how it manages them in that daily life. It might be about people trying to just take the next step. They actually like both parts of it, and they just feel like they're ready for something else. They're trying to get ahead. And the world is sort of designed for those people. Yeah. That's what we call progression rather than progress.
Hey,
on the off.
Oh. No. Please finish your thought. Forgive me.
I was going to say, on the off diagonals, though, some people are just trying to regain control over how they're managed, but they like what they're doing. Some people are trying to regain alignment around what they're being asked, what capabilities they're being asked to use, but they love the environment around them. Each one of those quests has a different set of advice that's good for a person. And so when I hear someone like Reed, who I think has probably seen it all, say that, it probably means that he's imagining that if he'd known sooner the way in which to use that common language, he could have more quickly come to the conclusion that he was on this particular quest, and therefore this kind of step was best for him at that stage in his career.
One thing I want to ask you, there's a story that's up on the Bloomberg today about recent college graduates are feeling a cooling U.S. labor market. The gap between the unemployment rate for recent grads and the overall rate for Americans with a college degree widened to 2.8 percentage points in September. This is data from the New York Fed. It's the largest on record going back to 1990, aside from a few months early on in the pandemic. And I guess what I want to ask you, these 9 steps that you talk about, you know, is it only, do you have the ability to follow it in a strong job market? In other words, I guess, you know, it's easy to kind of put your priorities and think about things when there's lots of choices, but when things are a little bit more difficult, is it tough to do that?
When the three of us got together to write a book, it's an excellent question, write a book about careers, we promised ourselves we wouldn't write a book about the dream job, we would write a book about trade-offs. Because ultimately, that's what a good career looks like. It's a bunch of trade-offs that you make with priorities attached to one or the other piece of that. That's why different quests are different people at different times, and most of us will filter through them over time.
Yeah.
So
just got about 20 seconds, so I want to let you just wrap it up. Yeah.
So really, honestly, it's about being able to tell your story for your particular moment, and then you're not competing with 1,000 people for the job. You're competing with 3, and that's actually better in a tight labor market. So the more work you do, the better off you'll be, even in the kind of labor market it looks like we're heading into.
Well, fun to check in with you. Ethan, thank you so much. Congratulations on the book. Ethan Bernstein, Professor of Business Administration at Harvard Business School. The book is called Job Moves, 9 Steps for Making Progress in Your Career. All right, you are listening and watching Bloomberg. We're talking apprenticeships. That's next.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Next up for Wall Street, NVIDIA's results after the bell tomorrow. Ahead of that report, we had the Dow Jones Industrial Average fall today, while the S&P and NASDAQ both advanced. Right to the numbers, S&P up 23 to 59.16, up today by about 0.4%. Stocks did rebound in a volatile session marked by geopolitical headlines. The Dow down 120, a decline today of 0.3%. NASDAQ, though, up 1%, up 195 points. The 10-year at 4.39%, with the 2-year 4.28%. Spot gold up $20 the ounce, up 0.8%, 26.32. West Texas Intermediate crude up 0.5%, 69.47 a barrel on WTI. Bitcoin now at 92,000, was trading above 93,000, a record earlier today. Right now, Bitcoin is up by about 0.8%. So today, the Dow lower, the S&P, NASDAQ both higher. As for the overall market backdrop, Andrew Cry is co-chief investment officer at Crescent Grove Advisors, and he was a guest right here on Bloomberg Business Week.
The fear is that the unknown, the ambiguity around what trade and tariff policy is going to look like. So I think for us, kind of the key narrative underpinning markets right now is one that's more focused on U.S. assets and sort of a home country bias for now.
Andrew Cry, co-CIO of Crescent Grove Advisors. U.S. housing starts declined in October to the slowest pace in 3 months as hurricanes exacerbated an easing in construction activity more generally. Housing stocks mixed today. We had Toll Brothers down 0.4%, KB Home up 0.7%, Pulte little change, down less than 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So in prepping for this next segment, came across a Bloomberg opinion column. It was late last year. It was asking the question, can apprenticeships restore the American dream? And the column went into how apprenticeships in America were nowhere compared to every other developed country. Their stats around 1 year ago, noting that the U.S. had 500,000 apprentices. That's 0.3% of the workforce, 70% of them, Tim, in construction trades.
Okay, that contrasts with the apprenticeship giants of Central Europe. They've got 10 to 15 times more apprenticeships per capita than we do. Even the UK, Australia, and Canada, they're 8 times bigger than we are.
We know that, right? We've had guests on talk about what's going on, certainly in Europe in particular. One generation ago, though, they looked a lot like the United States with relatively small apprenticeship sectors, almost all in construction. Today, it's very common for workers in those countries to launch a career in tech or healthcare or even financial services, all happening through an apprenticeship.
We've got with us somebody who knows quite a bit about this. Bertina Ciccarelli is CEO of the nonprofit Empower. It works to move people from poverty to the middle class through tech skills, training, and job placement programs. We've caught up with her in the past. Pleased to have her back with us this afternoon. Bertina, how are you?
I'm terrific. It's great to be back. Thank you for having me.
You know, since we last spoke to you, I've actually noticed, and maybe it's just I've been looking out for it, but I've noticed more and more people talking about these so-called trades.
Yeah.
And part of it, I think, is because a lot of it has to do with there's a real lack of plumbers, electricians in this country, and it's driven up prices for these home services. They're also just great careers to be in. Are now we thinking differently, finally, in the U.S. about apprenticeships? Again, this is not the exact type of apprenticeships you focus on, but are we thinking about differently as a society?
Absolutely, without question. And in fact, we are seeing an uptick in apprenticeships in the traditional trades. But there's also been a great rise in the interest of apprenticeships for non-traditional pathways like technology, which has never been deeply invested in apprenticeships until now, right? We find that right now today, that's about 60,000 manufacturing apprenticeships. There's only about 10% of that, a little over 6,000 today, that is in tech. But tech happens to be the fastest growing sector for apprenticeships, growing at 2.5 times annually per year. So, I think that we've got great promise in some of these non-traditional pathways to bring people into the IT sector.
Help me out. How does it work? Because I do feel like somebody says, well, I'm in an apprenticeship. They're like, oh, sorry. You know what I mean? Like, there is certainly a stigma, I think, in the United States. And we've just been talking about college degrees versus not, and elections and all of that, and kind of trying to understand where we are as a society, not just certain pockets, but everybody. And not everybody has a college degree. So tell us about these apprenticeships, what they're like, what kind of jobs, what do people ultimately get paid? What is it?
Yeah, so if you think about it, most Americans don't have a four-year degree. And I think that's why traditionally the construction trades and apprenticeships in those fields have been so popular and a path to the middle class. Arguably, apprenticeships in tech are the same thing. And by the way, many of these jobs don't require a college degree. What they do require are skills, certifications, credentials, and this is how it works. It's organizations like Empower that provides that, if you will, pre-apprenticeship training that skills up populations that are often overlooked in certain segments of our labor economy, like tech. And what I mean overlooked, it's individuals who might be veterans, young adults from underserved communities, people without college degrees, but who are motivated and have all the aptitude and the appetite to do well in tech, but they need the opportunity to get those skills. So that's where organizations like Empower and community colleges can play a really important role. We make it easy for then employer partners to become apprenticeship sponsors. So if you've got a skilled pipeline of talent ready to go that has those industries recognized certifications, the next step is for an employer partner to say, let's structure a 6-month learn to earn type of program where an individual gets those on-the-job skills that make them fantastic long-term employees of that company, and often, frankly, outperform those who might have college degrees.
Bertina, I could imagine somebody listening right now saying, wait a second, this sounds a lot like an internship, but by a different name. What would you say to them?
Yeah, it's actually very different. First of all, apprenticeships, whether they are registered by the Department of Labor or whether they're company sponsored, typically have a commitment to hire that individual full-time once the apprenticeship period has ended, right? Typically, apprenticeships are for a much longer duration. Oftentimes, internships are a 3-month between college semesters. Apprenticeships tend to be the full-time 6 to 8 months, sometimes up to a year. So there's a real commitment and an investment that a company is making to say, now that I have this individual who's skilled up, I want to convert that person to full-time. And by the way, in the tech sector, about 90% of apprenticeships convert to full-time.
All right, so talk about those full-time jobs. What are they? What are they paid? I'm curious about kind of the payoff, literally.
Yeah, no, it's good, right? We're talking healthy numbers. So these are jobs that, again, we're talking individuals without college degrees who which often start about 60,000 or so. And they're jobs in IT infrastructures where we're seeing the greatest demand. So, we're talking, for example, hardware installation, software support, hardware maintenance, computer systems and networking, upgrades. Big emphasis in cybersecurity, in cloud computing, and project management, right? These are just really core skills that any company needs, whether it's a really large multinational global company like a Citi or an Accenture, a mid-sized company like a healthcare services firm, or a small business, right? We've got a charter school network in the Bronx that is hiring IT apprentices right and left.
Hey, we only have a minute left, but I'm a little puzzled as to why the U.S. kind of got behind with this. Why is that? Very briefly.
I would say that it's just not necessarily in the DNA of understanding what it takes to earn a great income. And it's not to say that college isn't terrific. I'm the first advocate, and oftentimes once you get financially stable, you can go on and get that college degree. But I think we've really had a preference towards that 4-year degree. And I think the reality is there are millions of people who benefit from an apprenticeship program that land them a middle-class, good job that can help build wealth over time.
Very cool.
Yeah, very interesting. I also wonder, too, if companies at this point are thinking about survivability. How many executives, HR, CEO that talk about partnering high schools even, you know, to make sure that they've got the future workforce. It's really
Jamie
important.
Dimon talks about this a lot, the
Yeah.
future workforce.
Rethink. Bertina Ciccarelli, Chief Executive Officer at Empower, joining us once again from Brooklyn, New York. So appreciate it. You're listening and watching Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, TikTok, everybody. We are getting ready to wrap up on the Tuesday edition of Bloomberg Business Week. Just a little bit of a tease. Tomorrow, we're going to be out there on the West Coast, San Francisco, Schwab Impact, talking to everybody in and around the Schwab universe, financial advisors, what they are seeing in this current market environment. We're going to talk elections and a lot more. So looking forward to that. Having said that, front and center right now, we're waiting for a launch.
Yeah, SpaceX slated to launch its gargantuan Starship rocket at the top of the hour out of South Texas. It's a key test that is expected to include a guest visit from President-elect Donald Trump. You can see pictures of him right now getting ready to watch that launch. He's down there in Texas along with Elon Musk. I saw Ted Cruz, senator from Texas, in the background there as well.
Yeah, it's interesting, right? We saw earlier the president-elect walking with Elon in getting ready ahead of this. I will say that this is the sixth major test mission. It's coming as SpaceX CEO Elon Musk is heavily engaged, as we all know. We've talked about it a lot here at Bloomberg in transition planning for Trump's second administration. Has been really a constant or near constant fixture of Trump's inner circle since the November 5th election, and has been talking about overregulation, especially surrounding Starship. that factored into his decision to support then Republican candidate, presidential candidate Donald Trump, but now the president-elect. So again, all of it kind of tying together. So we're going to watch for it. The SpaceX test launch of its Super Heavy booster. We're going to wait for it to be caught by the chopsticks, which is always so cool. That happens about 7 minutes after launch. And then we've got about an hour after launch where you'll see Starship landing somewhere in the ocean. So that's kind of your trajectory or expected trajectory over the next hour or so.
It's supposed to all happen starting at 5 p.m.
What are you saying? I don't know.
Oftentimes this stuff gets delayed a little bit, but so liftoff happens about 2 seconds after countdown, okay? Then about 1 minute and 2 seconds, it reaches max Q, which is the moment of peak aerodynamic stress on the rocket. 2.5 minutes into the launch, or into liftoff, I should say, is the Super Heavy MECO happens. Its most engines get cut off. And then just before 3 minutes, the boost back burn startup comes from Super Heavy. As you mentioned, Carol, about 7 minutes into the launch is when that Super Heavy landing burn, shutdown, and catch happens. That's the moment where the chopsticks will catch the booster.
Really cool stuff, right? You just think about the visions that Elon Musk has, like him or not. He's certainly doing something interesting and really gave a boost, no pun intended, to kind of the space race that's going on. I don't know if it's a space race, but it's just so much more space exploration. Some might say it kind of reminds us of what was going on in the 60s, right? The pursuit of the moon for Elon Musk. He might like that.
Yeah, I was going to say
I mean, Mars is his dream, right? And so watching what Starship is up to specifically and the progress is, kind of different milestones in his pursuit to get towards Mars and other places.
This is the vehicle that is getting us one step closer to Mars, Elon Musk would say.
Exactly. So again, we're just maybe about 3.5 minutes away. I haven't seen any kind of countdown clock.
Maybe.
Yeah, maybe.
I don't know.
So we're waiting to see whether or not. But again, we did see the president-elect, Donald Trump. Is this a live shot, guys?
Yeah, that's a live shot.
It's a live
live shot right there.
So we are seeing Donald Trump. I can't quite make out exactly who he is talking with, but we do know
he's wearing a red "Make America Great Again" hat.
We do.
The president and the person he's speaking to are.
Right, exactly.
Just adding a little color.
Yeah. And we saw him earlier with Elon Musk, right?
And Ted Cruz was there as well.
Brownsville, Texas. So we are expecting this one. It'll be the 6th flight test. I'm looking at the SpaceX website, 409 total launches, 371 total landings, 340 total reflights. I think what still blows our minds with so much of what Elon Musk and Starlink are doing is this ability to send something out into space and then actually bring it back home.
Yeah, and cool. The launches you mentioned, those are regular. Those are happening at all times. They're carrying satellites, Starlink satellites and other satellites for clients for the U.S. government. Those are happening all the time from all over the country, from Vandenberg Space Force Base, in Southern California, down in Florida, happening as well in Texas. The Starship, though, this is the novel rocket at this point. It's the Super Heavy. It represents a totally reusable transportation system designed to carry both crew and cargo to Earth orbit, the Moon, Mars, and beyond. SpaceX says it's the world's most powerful launch vehicle ever developed, capable of carrying up to 150 metric tons. It's fully reusable, and then 250 metric tons expendable.
Now, what's interesting is this live webcast that they are doing, they say will begin about 40 minutes after or before liftoff, which is kind of where we are in this wait and see mode. We are expected, though, it to potentially maybe take off in about a minute, but we will see. But the next Starship flight test aiming to expand the envelope on ship and booster capabilities, get closer to bringing reuse of the entire system online. So all of these milestones, these objectives, are something that Elon Musk and SpaceX certainly have been working on for a long time, and it's interesting to see the president-elect there. It makes you wonder about innovation, space exploration, all of this, what it will look like in the next White House.
Waiting the launch to happen in the next couple of minutes. The height of Starship, close to 400 feet. It's 30 feet in diameter. As I mentioned, can carry between 100 and 150 metric tons, fully reusable.
All right. We're going to continue to monitor it, expecting that to happen any moment. In the meantime, we're going to head it over to Joe Matthew and Kaylee Lyons. They're going to carry you through on Balance of Power.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power alongside Kaylee Lyons. I'm Joe Matthew as we bring you a live look of southern Texas, where SpaceX is counting down to the launch of the 6th test flight of its Starship rocket. Taking off just seconds from now, SpaceX looking to duplicate the success of the previous mission, in which the booster known as the Super Heavy was caught safely after separating from the Starship. Joining us now, Bloomberg's Bruce Einhorn, Wendy Benjaminson, and former NASA astronaut Leroy Chiao. Kaylee, we are just seconds away from watching this begin. It'll be about 7 minutes from launch to the recovery of the booster.
Yep, just 3, 2, 1. We are seeing now the countdown.